I am Shelley Larson. I live in Lusk, Wyoming, and I've been a CPA in Wyoming for 35 years. I've been asked to do a short, basic educational video on financial statements, that topic for the purpose of nonprofit organizations, primarily senior citizen centers and their related entities. I'm going to address my comments to who I think my audience is, which is the executive directors of those organizations, maybe financial officers, bookkeepers, the directors of possibly transportation, food service, and certainly the board of directors. The board of directors needs to help manage using financial statements. And many times the board of directors isn't very familiar with the formats of the financial statements that are given to them. So this might help in that understanding. So what will we go through in this short video? These are the basic financial statements we'll go through. These three. Those three financial statements are produced by your accounting system. Many of you might use the QuickBooks kind of accounting system, so I'm going to speak to that primarily. The balance sheet is a frequently used statement, a very important statement. For nonprofits, that statement is called a statement of financial position instead of balance sheet. For this purpose of this video, we're just going to call it a balance sheet. The profit and loss statement is what QuickBooks would call this statement. It's called a statement of activities for a nonprofit organization, or maybe an income statement. If you've been in a for-profit entity, you might be used to that title. It's the same kind of statement. The third statement is the budget to actual. That's a really important financial statement for you directors and board members to manage from. They're all generated, as I say, by your accounting system, whatever your accounting system is. There are other reports also that are important to management. That one of those is your IRS Form 990. That is an income tax return for a nonprofit organization. So it's filed once a year based on your fiscal year, and it's filed with the IRS to report your activities. You're a tax-exempt organization, but the IRS still wants to know about your activities. So that's filed. Your payroll reports are going to go to the IRS. With regard to that 990, it's an important tax return, not only to file with the IRS, but it will also have to be held at your place of business for examination by anyone who wants to come in and examine your organization. Since it's a 501c3, it'll need to be submitted to the Department of Aging at the state of Wyoming. Possibly other entities too. So it's a very important form, not technically a financial statement, but a very important report. Payroll reports, those are submitted to the IRS periodically. The W-2s have to be submitted annually to the IRS and the Social Security Administration. The quarterly reports on payroll are called 941s. Those need to be submitted to the IRS quarterly. In addition, you have state payroll reports that will need to be submitted to the Department of Workforce Services with regard to workers' compensation and unemployment. I believe that's all the payroll reports that you'll need to file with anyone, although there are other important payroll forms, such as the W-4s that you need to gather from your employees when you hire new employees. I-9 reports that show your authorization to be able to work. And I think that's probably it for payroll reports. 1099 reports, those are also annual reports that you file with the IRS. The IRS requires that you file these. They're kind of like a W-2, but it's a report or it's a form that you send to your contractors, people that you pay money to for an intangible type of service or rent, such that an example might be a contractor that you hire to pave your parking lot. If that contractor is not incorporated, or if they are not taxed like a corporation, then you will need to send a 1099 to them. The way that you find out if you have to send a 1099 to an entity that you've paid over $600 to is you send them a W-9 form. Send them a W-9 form, then they respond. They complete that W-9 form and tell you how they're taxed. If they're taxed as a corporation or an S corporation, they check the box on there, and when you get that back, you see, oh, I don't have to send them a 1099 after all. But 1099s are sent to people and entities that you pay for contracted services, rents. Those are probably the two primary things that you're going to pay. Some more examples of 1099s that would need to be sent is services that are provided, such as your CPA, that you pay for assistance with your record keeping, for consultations during the year, for your audit. As a sideline on that, you really need to keep in good contact with your CPA throughout the year. When you have questions about your records, when you need suggestions on how maybe to format your financial statements or set up different accounts on your in your financial statements. Very important to stay in touch with your CPA. But the services that you pay a CPA or attorneys, those are 1099 type of reports. Additionally, reports need to be filed quarterly with the Wyoming Senior Services Board. The profit and loss and the budget to actual reports should be set up in a way that it makes it easier for you to complete those reports. And your CPA can also be helpful with that. Other internal reports that you want to compile, just that will help with your operations and help with your management. Some of them that I might think of is membership reports, statistical data reports on how many meals served through transportation, Meals on Wheels, or served in your facilities. Waiver services, non-waiver services, those kind of statistical reports that can help you manage. There are many of those, and the board of directors will be very interested. Additionally, reports should be compiled on your fundraising activities, which would detail the revenue realized from those, the attendance at those events, the kinds of expenses that were incurred at those events. Those summary reports should be provided to your board of directors at your meetings. Another internal report that you might consider is, I don't think that you should consider it, you should have it, reports on donors. Donor reports and contributions received, both cash and in kind or non-cash. Those kind of reports can be a supplementary report to your profit and loss statement, because on the profit and loss statement there will be a line item on donations and contributions, and that can be further broken down on that separate report to your board. And some other of those reports relating to contributions, those internal reports that are necessary, some examples on those might be some examples of in-kind contributions would be if I were to prepare, or maybe your financial officer is out of service for a while, and I came in and volunteered my time to be your financial officer for 3 months. We could quantify the value of my service and report it on that report. In addition, if someone were to volunteer to clear your parking lot during the winter from snow, and they don't charge for it, that would be an in-kind contribution. If someone were to donate beef to your food service program, that can be valued and included on your financial statements and included as an in-kind contribution. Volunteer services, I imagine all the centers have volunteers who maybe answer the phones, do all kinds of additional services. Those are in kind also. They are contributions, but they're not a cash contribution. So it's very important to keep track of your contributions, both cash and in kind, because there might be a grant that requires a certain amount of matching, and you can include in-kind contributions toward your match. So I think that this is another example when you're trying to value in-kind contributions of a time where it's very important to contact your CPA when you have a question. We can't address all those questions right now, but they will come up. So communicate with your CPA. One other thing I'd like to say about the financial statements that are the formal financial statements and the other reports that are presented to the board of directors at their meetings. The board of directors should always be asking questions. Any board member that doesn't ask questions is not really discharging their duties. Even if you really kind of know the answer to some questions, if it comes up in your mind while you're listening to a presentation or looking at a report, probably there's someone in the room who also has that on their mind and is not asking the question. So please ask questions. I want to talk just a bit about audits. Most all of your organizations are going to require an audit, whether it's once a year, once every 3 years, once every 5 years, you will require an audit. So how does that affect your financial statements? Your financial statements are set up for your management purposes. You can also set them up such that they'll translate easier to an audit report. That's something that you need to talk with your CPA about, or ask for their suggestions on how maybe that could be accomplished to help keep costs down. But your major concern when you set up your own financial statements is to make them usable for you as an executive director, as a CFO, as a board member. Make sure that they're understandable to you. They can be set up in many different ways using many different account titles, sub-accounts, and departments. And make sure that if those words are unclear to you, then you need to talk with your CPA to see how to use those better so that you can manage more effectively. I'd like to mention that these 3 basic financial statements are not just something that you have to do because you have to have a periodic audit. They're a necessary management tool. You can't manage without these, and you have to be able to understand them. If your executive director, if you're on the board and your executive director can't answer your questions, then the director can get that answer from the CPAs. You've got to be able to understand them to manage effectively. So now we can go on to the specific financial statements that we're going to talk about. I've set up just a very basic format on these. You have a lot more detail, of course, in your financial statements, but just so that I can talk to the basic categories on these financial statements, I've set this up. Here is the balance sheet, okay? It has 3 sections. It has a section for assets, liabilities, and equity. Assets are the items that your organization owns. Liabilities are what they owe, what the organization owes. And the difference between those two is equity or net assets. That's the term that you would use for a nonprofit organization, but it's the same thing. Assets minus liabilities equals equity. What you own, the value of what you own, less the value of what you owe, equals your equity. Therefore, you want a high equity. It means your organization is healthy. The higher your equity is. Now, of course, there are limitations on a nonprofit. You don't want to just stack up money and assets for no purpose. It needs to be used for your program services. But that's how a balance sheet is set up. And so Some assets that you might have, of course, is your checking account is going to have some kind of value. Okay, you're going to have equipment, which has some cost value. Okay, and you're going to have depreciation on that equipment. We'll talk about what depreciation is here in a while, but we're going to, the total accumulated depreciation will be presented as a negative, because that's depreciation is an item that decreases value as equipment decreases in value. Okay, so you in this example, you'd have a $3,000 in assets, and then your liabilities might be, let's just say, payroll taxes. You've incurred payroll taxes, you've not yet paid them, and so you have a liability of $500 in payroll taxes. So you have $3,000 in assets, you have $500 in liabilities. Your equity in this organization is $2,500. Assets minus liabilities equals equity. Those are the basic sections of your balance sheet and how it works. In a nonprofit organization, your equity or net assets, there are two categories of equity or net assets that a for-profit entity doesn't have. There's restricted and non-restricted. And you would usually, most of, if not all of your equity is unrestricted. However, you may be subject to some certain terms of some certain grant that restricts some of your equity. For some purpose. I don't want to get into that right now, but you may be familiar on your balance sheet with seeing two sections in your equity, restricted and unrestricted. So an example of a restricted section in your equity might be if you received a large donation to be used for some particular purpose. That would be restricted.